All right, so good morning, everyone, and welcome back to the chat. Welcome back to the chat. Um, Good morning, good precious morning. We thank God for a wonderful morning like this one, right? So let's go straight into the chat as always. Yeah, let's go straight into the chat. So I'll be starting off with gold. Starting off with gold. I'm sure we all could remember what we discussed yesterday. So the trade idea that was shared yesterday, it didn't go through, although the market did drop. Actually, the market did drop, right? The market did drop. So what happened was that, we went into a new trading day, right? Basically, so the market first of all went up, right? It went up first, and then before it now went downwards. We said it was going to clear this low because what it has invalidated it before. It has invalidated it before, and then that was exactly what it did. We were meant to just be on a trade from here to there, and that would have been it. But we didn't go in our direction because of the early hour trading event, trying to close gaps and all of those things. So yeah, trying to close gap and all of those things. So that's just what happened here. So basically, I placed a stop or a limit order. Yeah, I placed a limit order. So basically, I took some losses. I should have placed the limit order actually because it was overnight already. It was over the night already. It was over the night already. But that's by the way. You can screenshot this. Maybe you learn from it. But one thing that was correct is we calling the market that is still going to drop downwards up to this point, right? And then what did he do? He dropped up to that point and it even still went as far as going beyond that. So that's that. That's that. Now let's come back to the 1 hour time frame and look at where we are at. Let's look at where we are at. Like I said from yesterday, this particular um this is like a week capturing from from the daily time frame, right? I believe so. From the daily time frame. So we capture this week from the daily time frame, and then we captured it 50%. And we say if market is still above this 50%, there's likelihood of the market still going higher. Like based on daily closure, in as much that a daily candlestick haven't closed below this 50%, there's no way the market is what's proceeding higher. So that was the conference that we had. That was the conference that we have. Uh, I said, even as much if not close below this on a daily time frame, that's what I meant to say. There's no way, um, like the market cannot just continue to drop sporadically downwards. But anything that makes us close below this on a daily time frame, then you should expect a down move, like up to this point, a down move up to this point, possibly, or up to the 50% of this. Yes, up to that 50%, the 50% of that particular of this candle right here. So I don't spend much time trying to get the precise 50% point, but let's continue with our trade idea. So what have we done from the last five candles? From the last five candles, what have we done? One, two, three, four, five. Right. Good. So basically, from the last five candles, this is the market. This was the market high from the last five candles, right? This was the market high. We came down, we retraced backwards, and then we've broken the previous market low, right? We've broken the previous market low. We've broken the previous market low. So what we had before was one, two, three, four, five. We are here, and we have one, two, three, four. So I know we've not completed the five yet, but what we have from here now is this I and this I, they are relative. So we can still leave this point as our main point, this particular I here. So this and this, they are relative to each other. So we can still leave it. And then we can still leave the what's it called? We can still leave the average the gap. We can still leave the gap indicator. We can still leave the gap indicator. So one thing I wanted to discuss with us this morning is this. So on the 4 hour time frame, let me take this off for now. On the 4 hour time frame, we had this gap here. We had this big boy gap here. So what the market did over the night was actually decisive. So if you are awake over the night, what the market did was decisive. So when the market opened, it attacked this gap, it filled it, it even wicked above it. That is allowed, but it didn't close above the midpoint of the gap. So this would have been like a trade execution idea, which would have been a trade execution idea from here. But I wasn't awake. I wasn't awake, or I wasn't looking at the chart at this point in time. I wasn't looking at the chart, so that's very bad. I wasn't looking at the chart at this point in time, but it's okay. It's okay. So uh, yeah, so that's the trade idea. That's the trade idea. But let's pick off this. That was from the 4 hours. Like you wait for the first 4 hour to complete, and so that's something we can start looking at from now. Let's write that down. Let's write that down. Let's write that down. So what we identified is trading the early hour, early 4 hours of a new trading day. One can wait for the first 4 hours candle to make a decision. So you wait for the first 4 hour candle to like make a decision. Not that you're trading with it, but you're going to wait for it to like, okay, maybe close decisively higher or close decisively lower. And yeah, so that was what happened there. So that's what we identified. So it's not as if it's not as if so what I'm just trying to tell you, in the early hours of trading, in as much as you're not in a trade over the night before, if you just want to enter a new trade, wait for the first 4 hours. It's not that that's a rigid rule, but just a way to keep yourself safe. It's a way to keep yourself safe. So like I said, this was the 50% of from our last 5 weeks, the range you are trading out from last 5 weeks. Like I would not call, like the price, yeah, it's still range. You call it range because you have an upper boundary and a lower boundary, so you still call it a range. So the range you are trading out from the last 5 weeks, we are now below the 50% of that. Right, we've cleared the 50% of that, just like we discussed yesterday, because we have too many relatives. We have too many relatives, too many points relative to this particular point right here. Too many points relative to that point. So yes, we are looking at what the market will do around here. We're looking at what the market will do around here, and we're expecting we are expecting to see what the market will do decisively based on a daily candlestick. If a daily candlestick closes below here, then that's a good decision. But for now, that's not all. That's not all for now. That's not all for now. That's not all for now. So um let's see what we have now. Let's see what we have. If we go back to the 15 minutes time frame, going back to the 15 minutes time frame, right? Going back to the 15 minutes time frame. Okay, let me see this. Open is 4696. Okay, that's correct. That's correct. Okay, so on this particular time frame now, so the question is, what are we looking to do? What are we looking to do? What are we expecting from the market from here? Like I said, we just wait for the market to look at what the market does from here. Look at what the market does from here, first off. But if the market does not come here immediately, if it gives us a retracement, so what are the levels we can look at to place another entry, possible entry? Like I would say, please no, this is not a trading advice in any way or form. It's just a way to look at just an educational video, just highlighting how one can read the market, right? Just how one can read the market, how you don't have to like be rigid every time, how you can just read the market carefully and you still have wonderful results. Still have wonderful results. Let me see this. I just want to take off this particular I want to just indicate it as something. Okay, okay. So I just want to indicate the midpoint with a line, just a line, just the midpoint. Yes, so just a line, just to indicate the midpoint. and I can just give it some orange. And okay, so let's give it a test. Looking out for a daily candle close either above or below. So we know we are coming there. We know we are coming there, but we are just looking out for a daily candle close either above or below. That text is too much. That text is too much. So look out, you know, Nigerian style, for a daily candle close. So either above or below. And then we can just keep this to the bottom, pick it to the right. Okay, that's cool. That's cool. That's correct now. So I can now take this away from here. All right. So we have it. We have our candle. We have everything. So yes. Now to the 4 hours. To the 4 hours. We already have the market eye right here. If you've not cleared this eye, this particular structural eye, if you've not cleared this particular structural eye, there's no way the market we should expect an uptrend, right? Or at least if you form another structural high. But for now, these relative highs are like the main point. This from this candle and then the eye of this particular candle. So I don't want to capture the eye of this particular candle because yeah. So from the 4 hours, what are we seeing? What are we seeing from the 4 hours? We have an FVG right here. In the 4 hours, we have a good FVG right here. Have a good FVG from that point, right? Have a good FVG from that point. That's from the 4 hours. Looking at where we are at, and let's go this way first. And then we can do something here. Can do something here. If the buyers are going to be in control, if the buyers are going to be in control, we shouldn't be closing a 4 hour candle below this week. That's one thing. If the buyers are going to be in control below this, the 50% of this week, anything that makes us close below the 50% of this week would surely come back, will come down to this point, right? We'll come down to this point. But the question is, when we come down to this point, what are we doing? What are we doing when we come back down to this point? So we shouldn't forget that this, now we've cleared the midpoint. We've cleared this. We're having like um more confluence, more more reasons to expect the market to fall down to this point, but will not be ignorant of the support, right? Would not be ignorant of the support, right? Those are just points. You can set partial profits and all of those type of things. You can set partial profits and all of those type of things. Yeah. So let's capture this with precision. Although we would refine it, would go down the time frame and refine it. So the low 768 to 285. And then the high 76808. So if you notice something, I didn't draw much on, oh, market is going to drop, reset it, all of those type of thing. And there's a reason for that. It's just obvious, right? It's just obvious. It's just obvious. It's just obvious. So that's just the honest truth. It's just obvious. So yeah, that's the honest truth. We closed below it already and it's obvious. It's just obvious. So this was our 4 hours FVG. This was our 4 hours FVG. But we can see very clearly from here that it's not same thing from the 1 hour perspective, right? It's not same thing from the 1 hour perspective. It's not same thing from the 1 hour perspective. So we are from the 1 hour perspective also. This particular wick is modified, but want to leave it to take a decisive move from the 4 hours. Basically, let's leave it for a decisive move from 4 hours. So we'll keep monitoring the 4 hour time frame. If we close decisively um into this 50%, so would most likely reach down for here, and then if we reach down for here at the end of the day, if we close below this point, then that's a signal for us to know that, oh, gold is likely coming to this 50%, and then likelihood of clearing the previous low from the last 5 weeks, clearing the previous low from the last 5 weeks. So that's just the trade idea. But where we are at now is what you are exploring. Where we are at now is what you're exploring. So um, from this particular point of view, we have this particular AVG here. We have this particular AVG here. It's very, very big one. It's a very big one. It's a very big one. It's a very big one. Very big one. So if we capture it like this, we capture it like this, capturing it like this just gives us like a market retracement back to this week 5 week midpoint, range midpoint, retracement back to this 5 week range point, and then possibly drop to this point. But this market is structurally giving us like much risk because we have another FVG above here. We have another FVG above here from the 1 hour perspective. We have another FVG above here from the 1 hour perspective. Where did I? Okay, wait. 4 hour. Okay, this was something we said, so we can take this off the chart. Can take this off the chart. So most likely I'm going to be making 2 videos today. So I'm thinking maybe one video in the morning, one video in the afternoon, stuff like that. So that will be cool, right? So let's just make the 1 hour candle and the 1 hour bars. Let's make them white. Yep. Let's make them white. Let's make them white. Yes. So now let's go down to look at more structures. Let's go down to look at more structures. If I now see some things whereby we now introduce more, to build confluence. We introduce more to build confluence. So yeah, okay. So basically, there's one thing I would want us to take note of. You see, right now we are just trading from AVGs to AVGs, right? But market is all about building confidence. You have to build confidence, then you have to have some trades that you take and some trades you don't bother to trade, even though they are very promising. You have to have some trade you take, some trade you don't bother to trade, even though they are very promising. First trade that you don't bother to trade is a trade that requires you to be setting too much of a stop loss, too much of a pip count for a stop loss. You don't bother to take such trade, because if it goes in your direction, good, but if it goes against you, you are losing more than you can bag at that point in time. So that's one of the trade you don't bother to trade at all. You don't bother to trade it at all. So let's take off. So what moving from time frame to time frame help us do is it helps us to refine our entry point. So we will take this off right now. Take this off. We can easily put it back if we go back in time frames, and then we'll take this off right now. So we are here, we know we are coming down to this point. We are coming down to this point. That's something we are certain of. That's one thing we are certain of. And what even gives us this confidence? Don't worry. We know we are coming down to this point. Just take note of that. We know we are coming down to this point. You see, we are ranging between the 50% level of this point here. We are ranging between the 50% level of this point here. Basically, we are forming week. We are going back from higher time frame. We have a week. We have a small week, like 4 hours, trying to make a decision. Am I closing above? Am I closing below? Let's even check. how many minutes it is for the, okay, we have 1 hour for the 4 hour candle to close basically. Okay, so we are above the 50% of this. We have our first confluence that the market is going to trade downward up to this point. We break this on a daily, that's more strength. So we are back to the 4 hours again. We have this. Now, one thing I want to capture right now is this. Although the market has not given us a decisive low yet, market has not given us a decisive low yet. One thing I want to capture is this right here. That's one thing I want to capture. So from the 4 hour candlestick, we have this FVG point here. We have this FVG point here, which is the one I'm mostly interested in. This particular from the 1 hour, this particular FVG gives us much risk. This particular FVG gives us much risk. So I'm mostly interested in this one. So if I go down, so what I'm going to do now is I'm going to refine my point of entry. I'm going to refine my point of entry to something like, okay, this 15 minutes, something like this. So that's my possibly point of entry. And then, like, if we get the market retracement up to this point, so one is seeing something like, sorry, I'm not buying, I'm selling. So one is seeing something like a trade looking like this, the stop loss round about here. Okay, the stop loss might appear to be somehow even too big for the trade idea, but you see, we've not decided yet. Actually, we've not decided yet. So this first 15 minutes, and then this is the second one. This is the second one here. This is the second entry point here on the 15 minutes time frame. So those are like our two possibly entry points. But I would mostly be interested in this one. For one reason. In particular. I just identified it now. Now, if you look at this, and you look at this, right? You know, the market closes for a while, then opens by 11 o'clock on Monday. It closes for a while by about 10 o'clock or so. The market closed, then it opened by 11 o'clock on Monday. So if you look at the opening, it opened with a gap. And then the gap is just this right here. If we take this right here, that's the gap. For you. That's the gap, right? So that's the gap. So there's tendency of the market coming back. That's like trading with more confidence. So there's tendency of the market coming back to test this point. We have an FVG which covers it precisely. So this point right here is like a more confidence for me, point for me. So that's like what one will be looking at to trade. Now you see the market will just change and all of those things, but we don't need to catch the low. We're not trying to catch the low. We're only waiting for a retracement, and then if we get the retracement, we trade it up to this point. Now, why are we not trying to enter here? Like I said, we are only more concerned about this point because of the confluence which we have here. That's why we are not more concerned about this. So anything that makes us to be wrong, and then possibly we clear this high, then we start looking at a possible trend reversal. Anything that makes us start breaking structural point, start looking at a possible trend reversal. So that's that on gold. That's the trade idea on gold. That's like just analyzing gold and interpreting it. That's what it looks like. Don't forget, we said we're coming down here, we came down here, now we are at this point, and then the market is trying to make a decision. Should I continue higher? Should I continue lower? Should I continue higher? Should I continue lower? So that's just it. Now to Bitcoin. Okay. So Bitcoin, very cool guy, right? So we have Bitcoin. You already know yesterday what we talked about Bitcoin. Let's just run. Let's run the idea back. Let's run the idea back. Let's run the idea back. Let's run the idea where we are at. Let's run the idea. Let's run the idea. So we broke this. We came back here. Now we are here. This would have been the FVG from the 4 hour perspective. From the 4 hour perspective, we are well we are well we have closed below the encroachment, the 50% encroachment, right? But we'll go back to 1 hour, and then from the 1 hour, even we didn't see it from the 1 hour actually. From the 1 hour also, we are well, we've closed well into the 50% encroachment already. So that's like more confidence that, oh, this market is continuing downward. So this market is continuing downward. So the support levels that we are at, we're not trying to trade on support levels or something. We just put them there for possible retracement and all. So yeah, now that I've been unable to close decisively below this particular encroachment, like decisively, like a good body in. So don't forget this particular trade here from yesterday. Not that we took the trade, but like the analysis was there and all. So that's just what I meant by don't forget. So I'm looking for a continuous sell, right? But at what point would one be very much more confident in placing the sell on this big man? At what point? First off, this FVG turns to an inverted FVG. That's the first point. This FVG turning to an inverted FVG. That's the first point of conference. This particular FVG turning to an inverted FVG. So the market actually tried to obey it. The market tried to obey it at multiple times. So if we get a retracement back there, that's a good point. But we have another FVG right here, which is clear to the eye. Right here. It's clear to the eye. But the market has done a work of filling it to some extent. So we could have refined it up to this point, like using this eye, and that would make us fall just short between that point. But we don't refine it, we still keep it like this. So the trade idea will just be shorting from here, stop loss right about here, and then you already know the drill. And okay, we have not decisively said anything about where we think Bitcoin is coming. Okay, I think we said Bitcoin might be coming down to this point. Yeah, Bitcoin might be coming down to this point. But structurally, we just keep things. Yeah, that's structurally keep things at that point. Keep things at that point. Structurally. So this trade idea is just based on the immediate trend. It's based on the immediate trend. But anything that makes us close decisively and we break this particular point, that makes us break this particular point, then we start looking at, okay, the buy trend taking control back, because Bitcoin has been on some good reversal, not in a best structure or manner, but Bitcoin has been going good. So that's just the trade idea from the Bitcoin's perspective. That's the trade idea from the Bitcoin perspective. Yes. So like I said, there are going to be two videos today. So this is just the first one in the morning, and then we'll look at the next one later on in the afternoon, possibly 2 o'clock, possibly 2 o'clock. So let's put an alarm right here, and then on gold also. We might not see a retracement on gold like as quick as we would expect, as quick as we would expect. Gold is coming down for this big boy, but it's just the daily candle closure. Okay, the 4 hours. We have the 4 hours right here. Wait, I'm seeing something. I want to be sure. This was the big one. Yeah, it gave us this, it gave us this, and then this this particular boy here. It gave this one, this one. Boy, we go to the 4 hours. Okay, so just leave things as they are. It's not as if we are trying to concern about the low. We're not trying to catch the low right now because we are not looking to buy or anything like that. And if we're even looking to buy, that's not how we would place a buy trade. That's not how we would place a buy trade. So if we close decisively below this, which we are looking to do already, we're looking to do that already. So one trade we can look at again is let's take GBP USD. Okay, anything for us? Okay, I'm gonna delete everything on here. Weekly. Ah, nothing much, nothing much, nothing much, nothing much. But this is weekly actually. So we have 1, 2, 3, 4, 5. So from the last 5 weeks, the market has moved from a lower point to a higher point. That's obvious. That's very obvious. So just analyzing the chart, that's very obvious. That's very obvious. Okay. All right, so let's get the exact price point. 1.31593. 0.31. That wouldn't have much effect, right? I don't know. Um, 1.35995. Okay, so yep. So we have our points right there. So yeah, if we go to the daily time frame now and look at what we are doing from the last 5 days. After we formed this side, we came down a bit and all, you understand. So from the last 5 days, I would, to just make this video fast, I wouldn't start a lot of things. For the last 5 days, we have 1, 2, 3, 4, 5. So from the last 5 days, we opened here and we came downwards. Now we went up, we broke the opening price, right? But higher. So it's as if we are just back to the 5 days opening point. Like market is on that particular point right now, but that's not what you are trying to capture. So let's just capture the highest point and the lowest point that has been made from the last 5 days. So this the low. Let me change color. So, and just make it thicker, and yeah. So that's 1.344 ounces. 1.344 ounces, and let's capture the eye. Okay, the eye here is 1.35762. 1.35762. 1.35762. So basically, we've identified what we are at. The market came down from the low. Now the market is went up from the high, and basically the high is just, let's see, we have this wick here. Looking to the left, I'm using this particular candle. It gave us like a daily wick. It gave us a daily wick, not to not dwelling on it for long. It was like a daily wick, and then we were unable to close above it decisively on a daily time frame. So if we're able to close above it decisively on a daily time frame, then we could have said, oh, possibility of us claiming this point. But we're not able to close above it decisively on a daily time frame. That's one thing. That's one thing. That's one thing. And another thing is still looking to the left, we have gaps. The market has been giving us multiple gaps or this well. It has been giving us multiple gaps or this well. It has been giving us multiple gaps or this well. We have an FBG here. We have an FBG here. And the FBG was what gave us this particular support. This particular FBG here gave us this particular support, which is a very good one. Which is a very good one. It was this particular support, which is a very good one. But I'm just capturing support yet. There's no confluence because the market came down to this point. Then so there's no much confluence yet. There's no much confluence yet. Now we have a gap here, market gap down from this point. We have this particular gap right here. And we can decide to capture it or not. But one thing the market has given us already is a support at this point already. The support at this point, but this support didn't have the strength of going as high as closing above the previous high. It doesn't have that capacity of closing above the previous high from the 5-week range gap or the yes. So you are presently on the 4-hour time frame. And what we can see is market gap down, right? Market gap down from the opening of the new week. Market gap down, it did gap down. So we can capture the gap and make some, actually, whatever confluence you want to make now is already in play. Whatever confluence you want to make now is already in play. So So why do we keep using gaps and gaps and gaps and gaps and gaps, right? Why do we keep using gaps and gaps? That's one thing you should ask yourself. So when the market gives us a gap, to my own understanding, not a rigid theory, not a firm theory, not the overall theory. When the market gives us a gap, when price goes back into this gap, that's like a point for a decision to be made. Okay, from here we are back to the entry point. Do you want to go higher or do you want to go lower? Just interpret it in that manner. We are back to the entry point. Do you want to go higher or do you want to go lower? So for example, we gap down, we came back to the midpoint, we closed above it, and then we came back, touched the midpoint, and then we went higher. That was what happened on Monday. So now we are back again. But this time around, we've closed below it from a 1 hour time frame. We've came back to it and we are finding support. So there's likelihood that we are coming back down. Coming back down. There's likelihood that we are coming back down. But we'll not just place the trade based on that alone. So let's drop down to 15 minutes. Okay, you're like, why am I not capturing the recent 5 candles? 1, 2, 3, 4, 5. So you see, we're seeing a downtrend. We're seeing a downtrend. I've seen a downtrend, basically. I've seen a downtrend, and this is what the downtrend looks like. I've seen a downtrend, basically. Yeah, I've seen a downtrend. I've seen a downtrend. There's one trade idea I want to run, but the risk is not much because this is a currency pair. The risk is not much because this is a currency pair. The idea is simple. It's shorting from here, setting stop loss at this point, and basically targeting this. But I don't do that. That's not structural enough. That's not structural enough. I wouldn't do that. So if you go to the 15-minute time frame, going back to the 15-minute time frame, going back to the 15 minutes time frame, you see what I'm saying clearly. Okay. Okay. This I want to capture the 135003 and the close the low 135219. 135219. I'm coming 13. Okay. Why is this thing acting this way? This candle, the low is 135219. And then this is correct. Okay. So basically, we've come to this point. We've closed below it decisively, right? We've closed below it decisively. Initially, what we had was the market gap down. It went up. It came down. It was unable to like even breach it at all. We didn't test it at all. We left this gap. We left this gap. We left this gap. This particular FVGA, and then we broke the previous market high. We made a retracement into this point, good entry points. We made a retracement just into this FVG right here. Yes, just into this FVG right here. Look at that. From here, we had like a good opportunity to buy, and then would have just bought from here up to this point. Now, two things are happening. This was from the 15-minute time frame. This was the low, a decisive low. This was a very decisive low where decision was being taken. Now, what do? We came back there. We tried to hold, but we broke it. We now formed the high immediately. So now we are into this point right here. We're into this point right here. We're into this point right here. So we have two confluence. We have two confluence, and that's why I didn't want to place the trade immediately. We have two confluence. The first confluence being that now we are waiting for a retracement to which level? Let me take this off. We're waiting for a retracement to which level? Waiting for a retracement to which level now is clear to the eye. This held before. This FVG was validated. It was validated. So one thing I should say is whenever an FVG is validated, that's the tendency of be acting as an inverted FVG. An inverted FVG. I've been using that terminology. Just lend me the terminology for a while. So we have this particular point here. We have this one here. So that's the trade idea. So we can either see the market come to this point and start dropping. That's like using the actual gap. And to strengthen our confidence, we take our week, and then I know the week doesn't sound necessary. It doesn't sound necessary. So at a good retracement level, this point coincides where this average midpoint, the 0.71, and then this point, all of them coincides well. Basically, this 0.71, 0.786, and then all of the midpoints coincides well. So if you are shorting, you can take this one here, and then your stop loss will be just right about there, just like a 5 pips stop loss. And the target is you want to see the market come and clear this particular low, possibly clear that particular low, and you are done for GU. You're done for GU. So yeah, that's the trade idea for the day. That's a wonderful trade idea for the day, and I'm done with the analysis. So we just looked at SAUSD, and yeah, look at SAUSD. We looked at BTC, and now looked at BTC, and we looked at GBP USD. So whichever one, that's just how we were able to read the price. So on your end, you read your own price also. Just do your due diligence and read your price. Try and read it correctly, and then hopefully it gives you wonderful opportunity. Yeah. So that's the trade idea, and that's everything. That's how I analyze the chart. So don't forget, it's not a financial advice in any form or manner. It's not a financial advice in any form or manner. And then making a video in the morning is actually exhaustive. So that's why my voice is like this. I just said, oh, let's do this. That's what I just told myself. Let's do this. Oh, you're missing out a lot on opportunities, actually. You're missing out a lot on opportunities. You're missing out a lot on opportunities. I'm missing out a lot on opportunities. But it's okay. We'll keep dedicating more time, building more willingness, and analyzing more charts. I've been away from the chart for a while now, building my tool. But that's by the way. So have a good rest of the day, and please don't forget we might have something coming out from Forest Factory today. I don't know. Today is 28th, so you have to trade. Okay, nothing much. Uh, nothing much which can affect your trade except they drop a news, unexpected news. So there's nothing not much that can affect your trade. Yeah, nothing much. Okay, so that's it for me. Have a lovely day and trade safe everyone. Bye bye.